Right. The Toronto real estate market is clearly seeing a big shift with March numbers that just came out, lowest numbers in over 23 years and over 20 years. So clearly making a lot of headlines. And a lot of that is obviously because of the uncertainty surrounding the tariffs imposed by President Donald Trump south of the border. But there's also a lot of other uncertainties around elections that are about to happen in Canada. So there's that whole component. All of these things combined together, we're seeing this sort of perfect storm of why we're seeing this lack of sales activity. There's obviously more to it, and that's what I'm going to do in this video, provide more context into the numbers, and particularly one thing that I find almost nobody's talking about, and I'm going to share what that is with you as well in this video. But let's get started with the March numbers that have come out. If we look at the TREB numbers, TREB meaning the Toronto Regional Real Estate Board, which covers not just the city of Toronto, but also a lot of the surrounding districts and cities, municipalities like Peel Region, Halton, Durham Region. And the overall sales numbers coming in at 5,011, which is a 23% decrease from March of 2024. New listings are up 28.6%. So last year we were at 13,000 new listings for the month of March. This year we're at 17,000. So 4,000, nearly 4,000 more listings on the market this March than the previous March. Active listings, this is an important number. Active listings at 23,088, almost 89% up from last year. And we're going to talk about this number because this is a very important metric here. Average price, surprisingly, down only 2.5%. Now, again, this is the average price of all different property types in all different areas of the GTA. This is the average macro overlook, right? Some areas it's more, some areas it's less. This gives us an overall picture, bird's eye view of what's happening. So how are active listings so high and new listings so high? Sales, 23% decline from last year, but average price is only down 2.5%. So one of the things that I do is I track numbers for every single month over the last 7 years. I've been tracking this for the last 7 years. So right here we have March 2018 to March 2025, just to bring a little bit more context. So these are numbers we just saw in that screenshot from TREB. But let's talk about sales to new listings ratio. By the way, March of 2018, average price 784,000. Right. So the number that a lot of people don't talk about is this number right here. What I've done is I've looked at what pricing was in 2018. Again, this is pricing for all property types in all of the TREB areas, right? But still gives us an overall picture of the market, macro perspective. $784,000, and the price, average price in 2025 March is $1,093,000, about $1.1 million. If you look at the average of the last 7 years, from 2018 to 2025, we're still at, on an average, seeing a 5% increase in price year over year. Now, a big part of this had to do with the fact that we saw this massive correction in 2023 because prices were heavily inflated in 2021, 2022. If the interest rates hadn't gone up so dramatically as they did over the course of 2022 and 2023, which really brought this big correction into the market, this average sale price, had that not happened, would be, well, I would say over, 1.4, maybe 1.5 million today. 5.1%, 5% on a yearly basis is what I would consider a pretty healthy, balanced market. If we look at the number of new listings over the course of time, right? Just the last 7 years, I don't want to go too far back, but this 7 years is a good 5 to 7 years is a good number to track. 2018 to 2024, we're hovering anywhere from 14 to 22,000. And the reason why we're seeing higher new listings in the years of 2021 and 2022 is because those were the years there was a lot of confidence in the market, and people buy and sell when there's a lot of confidence in the market. People particularly buy when there's confidence in the market. So 22,000, because, there was a lot of activity in the market happening. This makes sense. Now we have lesser listings or new listings than 2022. But also, if you look at the next metric, which is the sales to new listing ratio, how much of those new listings are actually getting sold, they were pretty steady, around 48 to 50% to 60, in the peak, around that peak time. Even 2024 March, we're looking at 50% sales to new listings ratio. But look at what's happening in March of 2025. 29% sales to new listings ratio. So obviously a lot of listings are not being absorbed. And we can see that further in active listings. So active listings are listings that have not sold yet in the previous months that have been sitting on the market. 88% higher than March of 2024, sitting at 23,000. And one of the metrics that I like to look at is the months of inventory, MOI down here. The MOI tells you the absorption rate, the overall absorption rate of the market. So if no new listings came onto the market, it would take nearly 5 months to sell all of the existing inventory. So this figure right here, 4.7, nearly 5 months of inventory, tells us that we're in a very balanced sort of buyer's market territory right now overall. By the way, if we look at last March of 2024, the months of inventory was under 2, which puts us at a very favorable seller's market. So even in a market, just for context, where we are today, if we look at just a year ago when rates were still sky high. By the way, we've had so many rate drops since then. We've had 6 or 7 consecutive rate drops. But even in that high interest rate environment, we had less than 2 months of inventory last March of 2024. That should give us some more context onto what's going on right now. People have such lack of confidence in the market, overall economy. People are fearing job losses that people aren't really going out and buying. We're seeing a lot of first-time buyers right now, people who have to buy or people that have to move in order to relocate or a change of job. Those folks are still moving and still buying. But a lot of people are in that kind of wait and see what happens mindset. You just want to wait out the election and see what happens. They are also wondering, am I still going to have my job while all this is going down with the threats of tariffs? But this particular number that I want to share, the 5.1, especially the pricing from 2018 to now, over the last 7 years, this shows us why things are so unaffordable, because this tells me that the Toronto real estate market, the GTA real estate market, is extremely resilient. Look, of course, we see a lot of these one-off outliers that make headlines, and they make headlines for a reason because they're outliers. Places that are selling for $300,000, from what they were purchased a year ago at a loss, or $200,000, $150,000 loss from a year ago, particularly in the resale market. I'm not talking about the assignment market at all. The assignment market is a whole different market on its own, entirely different beast. But just the resale market alone, we do see these one-offs, and they are one-offs because these are likely people that bought 2021, 2022 peak pricing. They probably were on a variable rate. Monthly pricing went through the roof. Their monthly mortgage costs went through the roof, and now they're in a place where they have to sell. The market corrected so much that they're taking big losses, right? But we're not seeing that across the board. We're seeing those one-offs, outliers every now and then, but the market overall is quite resilient. A lot of people have held onto their property for a number of years, and they have a ton of equity in their property. All right, now let's take a little bit of a deeper dive into the sales and average price by different property types. So if we look at the number of sales for detached, pretty much everything year over year has gone down. Detached, semis, townhouses, everything has taken a big hit. Condos, they're all down anywhere from 22 to 31% in terms of number of sales. But as far as pricing goes, again, overall, 416 and 905, we're looking at detached gone down by 0.2%, semi-detached down 4%, townhouses down 2.3%, and condos down 1.3%. Condos even staying quite resilient year over year at just 1.3. In the city of Toronto, the average condo price is $724,000, which I would think in a market like this, when there's so much inventory, that this price would be a little bit lower, maybe in the high sixes, but not in over $700,000. So let's actually look at the breakdown of these property types a little bit further. So I've got this graph for sales by property type. If we look at the sales, and this is just the city of Toronto, not all Treb areas. So in the city of Toronto, if we look at detached, they share about 30% of the sales in the city of Toronto, semis at 11%, townhomes at 3.1%, and condos at, if you combine condo towns and condos, we're looking at close to 60%, 55% of the share. So majority of the sales that we saw in the city of Toronto were condos. It makes a lot of sense because condos also had the most inventory and the most active listings. So if we look at active listings by property type, condos are nearly 70% of active listings, and detached only 23%, semis 4.8%, townhomes 2.3%. What we're seeing right now is clearly a correction in terms of property prices. We've seen this specifically in the years of 2024 and now in 2025. A lot of the market correction. Sales, if we look at 2022 2022 peak to now have corrected around 20 to 22%. But overall, if we look at historical figures over the last 5 to 10 years, on average, we're year over year, we're doing about 5%, which in my opinion is a pretty healthy place to be. In order for pricing to be affordable, where people can actually enter the market, we're going to need to see a lot bigger corrections for that to happen. And we're talking major job losses or something major happening in the economy. But if things continue this way, even with these tariff threats, and even if we do start seeing unemployment numbers go up, I don't see this huge correction happening anytime soon. The issue, as I keep pointing to in most of my videos on my channel, is that we have a major supply issue in the city and in the country. And I did a video recently for Mark Carney's housing plan. I encourage you guys to go check that out. I'm on this channel, I don't talk politics or support anyone in particular, but I am always curious to hear about different politicians' strategy and plans on housing. And I frankly don't really believe that any of the candidates have anything concrete as far as tackling the housing supply. Mark Carney is very much favored towards making housing for the low-income housing and also towards student housing, senior housing, but I haven't heard a lot from him about what's he going to do for the average Canadian to be able to afford a home, the middle class. So I'm curious to hear your thoughts. Drop it in the comments. Let me know what you think is the solution for the pricing to get more affordable. As always, if you found this video helpful, please give it a like. And if you're new to this channel, please subscribe. Thanks for watching.